Hello, everybody out there. This is Jimmy up here at Credit Suite. I will be filling in for Ty today. So today we're going to discover and look into late stage startup funding solutions. So we're going to discover how to get the business credit and business funding that you need. Okay. Contact information here for us at Credit Suite. So Ty Crandall is our CEO, 877-600-2487, info@creditsuite.com. And then also at the bottom there, creditsuite.com/get funding. All right, so what is a late stage startup? So when we think of businesses, we think of startups, long-term businesses, and everything in between. What is the in between? So late stage companies have typically demonstrated viability as a going concern and generally have well-known product or service with a strong market presence. Late stage companies have generally reached a point of positive cash flow generation and begin to experiment with expanding into tangible markets. Hence, a late stage startup is generally one that's been around for about 1 or 2 years. Although such a business can be older or even newer, depending on their circumstances. So every startup in every stage needs money. We all know that. Your circumstances might be making it hard to get more traditional forms of financing. So this can be because A, your business is still considered to be a startup. B, it's a high-risk industry. Your personal credit scores are less than wonderful. You don't think that you have any collateral, but as a late stage startup, you have cash flow. So let's start with making it easy to fund your business. Then we'll dive into all your options. Fundability. It is the ability of a business to get funding. It is essentially covers all the points a lender or credit provider will be looking at when they're trying to figure out if you'll pay back a loan or credit that's extended to you. So this includes factors you probably haven't thought about or aren't think is important. They are. So does your late stage startup name include the name of a high risk industry? Did you know that it could be preventing you from getting funding? It does not have to be this way. You don't have to include the name of your industry in your business name. There's nothing deceptive or illegal or otherwise wrong about calling a business Dave's rather than Dave's check cashing. If your business name includes the name of a high-risk industry, you should change it. Now's a good time to do that. If you change your business name, be sure to change it everywhere, okay? Change it in these places, among others. So any incorporation documents, licenses, your records with the business credit reporting agencies, so Dun & Bradstreet, Experian, and Equifax. Secretary of State, the IRS. It is best to copy and paste this information. Do not chance making an error by typing it in by hand. This is because differences will be interpreted as fraud by the lenders and credit providers. So if you put a comma in the wrong place or add a comma when it doesn't need it, you use an ampersand sign versus typing the word and, those can all be looked at as fraudulent, and it's not gonna be good. It's gonna delay the process. Okay, so make sure that every letter is in every spot, every sign is correct, every quotation is right. So keep records of where your business name is. Okay, so you can be sure that you've caught everything. So NAICS codes. You choose your business's NAICS code when you register it, okay? NAICS industry codes define businesses based on the activities in which they are primarily engaged. The NAICS puts out a list of high risk and high cash industries. Higher risk industries include casinos, pawn shops, and liquor stores. If more than one code would apply, there's nothing deceptive, illegal, or wrong with using a less risky one. Okay? The IRS lenders, banks, insurance companies, and businesses that credit report agencies use NAICS codes. They're trying to determine if your business is a high-risk industry classification. So you could get a denial for a loan or a business credit card, even based on your business classification. Okay? Some codes can trigger automatic turndowns, higher premiums, and reduced credit limits for your business. To get financing or credit for your business, you must have a business entity. A corporation or LLC gives you more credibility in many cases. It also helps you reduce your liability. It separates you from your business. It makes the business a separate legal entity. Make sure that your entity is set up in the same state as your business address. So your EIN. Your business must have a federal tax ID number or an EIN, employee identification number. Just like you have a social security number, your business has an EIN. Your tax ID number is used to open a bank account to build a business credit profile. Take the time to verify all agencies, banks, trade credit vendors have your business listed with the same tax ID number. Your business address. Your business addresses has to be real brick and mortar building. It must be deliverable physical address. For a retail establishment like a clothing store, this cannot be a residential address or a PO box. Do not use UPS mailing addresses. Some lenders will not approve and fund unless this criteria is met. Your business phone number. So a cell or residential phone number as your main business line could get you flagged as unestablished, but a VoIP is okay. It's best to not give a personal cell or residential phone as the business phone number. Your phone number must be listed with 411 for most credit issuers and lenders to approve you. Check your record to see if you have listed and make sure your information is accurate. If there is no record, then use listyourself.net to get listed. Business phone number should be toll-free, 800 exchange or comparable. Business licensing. Make sure you have the proper licensing for your corporation. Make sure that addresses on your licenses is the same as all other documents. Contact state, county, and city government offices. See if there are any required licenses and permits to operate your type of business. Being licensed also builds credibility in your business, and that can help you get more customers. If you haven't completed this step, there's no time like the present to get this done. All right, so some fundability issues, your business website and email. You're going to need a company email address, okay, for your late stage startup. This email must be on the same domain as your website. Use a professional email address such as yourname@yoursite.com. This usually comes with website domain providers such as GoDaddy. It is not just professional, it also greatly helps your chances of getting approval from a credit provider. Do not use Yahoo, AOL, Gmail, Hotmail, or any other kinds. Outlook of emails, okay? Let's talk about getting money for your late stage startup. The 3 C's, capital acquisition formula. So you guys may know if you've watched our videos, the 3 C's, credit, cash flow, and collateral. When you think like a lender, you realize that they just want to be assured that you have the ability to pay them back. Lenders look at one of 3 things for loan approval: cash flow, credit, either business or personal, collateral. The more of these C's you have, the more funding options are available. For the many forms of funding we're going to showcase today, we show you exactly what you need to have for approval. Let's start with funding that you can get with good cash flow, okay? Fundbox. With proven cash flow, Fundbox is a terrific option. Fundbox will connect you directly to your online accounting software. So that's all you need to do. You can get invoice financing or line of credit from Fundbox. So to get a revolving line of credit up to $150,000, they're going to auto debit your weekly payment from your bank account. You do not need to show a minimum personal credit score. You don't need to show a minimum time in business, okay? So this is going to be based on cash flow, right? So your personal credit, your time in business, not going to be important factors here. Up to $150,000 on line of credit, they'll approve you based on your bank statements, okay? So you do need to have a bank account, and you do need to provide that ability to pay them back through your bank statements. More cash flow financing. So a loan made to a company is backed by a company's expected cash flows. A company's cash flow is the amount of cash that flows in and out of a business in a specific period. Cash flow financing or cash flow loan uses generated cash flow as a means to pay back the loan. So terms and qualifying. Often you will need to have a few years time in business, okay? You may need to meet a certain minimum credit score requirement here. You will need to prove historical cash flow, present your account receivables and account payables so the lender can determine how much to loan your business. Accounts receivables financing. You can use outstanding account receivables as collateral for financing. Again, they need to be outstanding, okay? But you can use those account receivables as collateral for financing. Receivables should be with the government or another business. If you also have purchase orders, you can get financing to have those filled. You will not need to use your cash flow to do so. Account receivables credit line with rates of less than 1% with no consumer credit requirement. Use your outstanding account receivables for financing. Get as much as 80% of receivables advanced ongoing in less than 24 hours, right? So up to 80% of the value of that account receivables in less than 24 hours. The remainder of the accounts receivable will be released once the invoice is paid in full. So you get 80% in the beginning. You'll fill the order. The lender will collect their payment. Once that's been paid, then the remainder will be paid to you. So factor rates as low as 1.33%. Get accounts receivable credit line with rates less than 1%. No consumer credit requirement. Computer leases. So leverage your cash flow to get computers. Just like furniture, you can lease computer equipment. You can take advantage of tax incentives and use your cash flow to its fullest advantage here. So this includes file servers, backup storage, hardware and mainframes, laptops, printers, and even scanners can all be underneath this umbrella of computer leasing, okay? Cash flow is going to be key here. Terms can include leasing to ownership. So often leasing provides businesses with a full deduction of lease payments against current earnings. A large part of approval is based on the personal credit and background of the owners, okay? So personal credit will be required for this type of lending. Not on trade or banking information that startups in particular do not have yet. So this is good. This allows you to overcome the banking or trade that you may not have, especially with a startup company. So your personal credit helps you overcome not having that. So lease $5,000, even up to $250,000 and more in computer equipment value. Lease terms range from 24 months to 60 months. Merchant lines of credit. So a merchant line of credit, they're lines of credit offered by stores. These lines of credit can only be used exclusively at the store from which they are offered. So like Amazon, which offers lines of credit through Marcus by Goldman Sachs. That is an example of a merchant line of credit. So some terms and qualifying. The terms vary. Eligibility can be based on cash flow. Such lines of credit may offer special financing terms during certain time periods for certain products or for a certain dollar amount spent at the store, okay? In some cases, payment in full must be made after a specified period of time, like a promotional period. So watch out for those. Contrast with traditional credit cards and merchant credit cards, which allow borrowers to continue carrying a revolving balance with interest. So those merchant lines of credit could be set up again on a short term, sometimes even a net 30, which will make you pay within 30 days. So in exchange for a shorter repayment period, the borrower may be offered low or 0% interest or a discount off their purchase price. Merchant cash advances, MCAs. So an MCA technically isn't a loan. Rather, it is a cash advance based upon the credit card sales of a business. A small business can apply for an MCA and have an advance deposited into its account fairly quickly. So you can offer net 30 terms, but not have to wait a month to get paid. A merchant financing program is ideal for business owners who accept credit cards and are looking for fast and easy business financing. An MCA program is designed to help you get funding based strictly on your cash flow as verifiable per your business bank statements, okay? Again, not personal, business bank statements. Hence, the lenders in general will not ask for any burdensome document requests. So some terms and qualifying for MCAs. A lender will review 3 months of bank and merchant account statements. They're going to look for consistent deposits, okay? They don't want to see the up and down. So they want to see deposits showing revenue is $50,000 or higher per year. So it's less than $5,000 per month. They will also verify time in business of 6 months or more. So not a lot of qualifications here. 6 months or more time of business, 50,000 annual deposits. Lenders are also looking to see that you don't have a lot of NSFs or non-sufficient funds showing in your bank statements. They want to see that you don't have a lot of chargebacks on your merchant statements. They want to see that you have more than 10 deposits in a month going into your bank account. In essence, they want to see you manage your bank and merchant accounts responsibly. And they want to see that you have a decent number of consistent credit card transactions every month. So again, consistency is key here. They're going to look at your last 3 to 6 months. They want to see 10 deposits a month or more, minimize the non-sufficient funds. Again, just show that you're responsible and you have the ability to pay them back. You can also get funding based on your business revenue. Revenue is slightly different from cash flow. Revenue is the money that a company earns from the sale of its products and services. Cash flow is the net amount of cash being transferred in and out of the company. So as a late stage startup, your business by definition is generating revenue. It is also called royalty-based financing. Business revenue financing is a way to raise capital from investors who get a percentage of the enterprise's ongoing gross revenues in exchange for money invested. In a revenue-based financing investment, investors get a regular share of business income until a predetermined amount is paid. Often, this predetermined amount is a multiple of the principal investment. It is usually between 3 to 5 times the original amount invested. Since repayment of the loan is based on revenues, the time that it takes to repay the loan is going to fluctuate. The faster revenue grows, the quicker you'll repay the loan, vice versa. The percentage of a monthly revenues committed to repayment can be as high as 10%. Monthly payments will fluctuate with revenues highs and lows and will continue until you pay back the loan in full. So let's touch on getting funding with good personal credit now. Credit line hybrid. If you've watched our videos in the past, this program is probably the #1 program that we see receiving funding for all different levels of business owners. So a credit line hybrid, it is a form of unsecured funding. Credit line hybrid has an even better interest rate than a secured loan. Get some of the highest loan amounts and credit lines for businesses. 0% interest business credit cards with stated income. Okay. These report to business credit reporting agencies. You can build business credit at the same time. This is going to get you access to even more cash with no personal guarantee. So what you'll need for terms and qualifying, this is what we consider like a no documentation process. You'll need good credit score or a guarantor with good credit. So you can use a credit partner in this scenario. FICO score needs to be 680 or higher. No financials are required, meaning tax returns or bank statements will not be asked for during this process. You can often get a loan of 5 times the amount of your current highest revolving credit limit account, up to $150,000 in total. So let's touch base on business credit, because good business credit will also help you get funding. Okay. So vendor credit. Starter vendors are open to working with most businesses, even startup ventures. Make sure vendors report to credit reporting agencies. Not all do. So vendors report to business credit reporting agencies within 60 days. They help you build your business credit profile and your score. Okay. Terms are going to vary depending on the vendor. They tend to be net 30s to start out. You will not need collateral, good personal credit, or cash flow to qualify for these vendor credits. But since you do have good cash flow, it should be even easier to get approved. Retail credits. Retail credit comes from major retailers like Staples. Buy everything from office supplies to even power tools. Retailers will check whether your business information is uniform everywhere. They will also check whether your business is properly licensed. Qualifications will vary. So retail credit, terms and qualifying. Qualifications are going to vary. There can be a minimum time in business requirement. There may even be a minimum number of employee requirements or minimum annual sales. As a late stage startup, you probably meet most, if not all, of the qualifications already. The terms can be revolving here, okay, instead of the net 30. You'll need at least 3, but 5 is better, accounts reporting to the business credit reporting agencies. So I like to say 5. I teach my clients 5. So I would say do at least 5 accounts reporting to your business credit reporting agencies before looking into retail credit. Fleet credit. Fleet credit is used to buy fuel, maintain vehicles of all sorts, repair vehicles. Even businesses which don't have big fleets can still benefit. They're usually gas credit cards. Okay, fleet credit terms and qualifying. Requirements will vary. There may be a minimal time in business requirement. If your time in business still isn't enough, offer a personal guarantee or even put down a deposit to secure the credit. Bank credit cards. So there are more universal type of credit cards, like a MasterCard. They can be used pretty much anywhere. These cards may even have rewards programs. Bank credit cards, terms and qualifying. The terms can be revolving. This is what most business owners are looking for, the ability to pay it back over time. So revolving is a big benefit. Usually, you'll need to have at least 14 accounts reporting to your business credit reporting agency. So we're increasing these requirements in these tiers you see here. So now we're talking about having at least 14 accounts reporting to the business credit reporting agencies. There can be longer time in business requirements. There may also be a minimum number of employee requirements. As you continue building business credit, you will start to qualify. Let's touch on collateral-based financing. There are a lot of options, but since you already have cash flow and the time in business, now we can be choosy with the collateral. 401k financing. This is not a loan. You will not have to pay an early withdrawal fee or a tax penalty with 401k financing. You're putting the money back by contributing just like with any 401k program. This means that you will not lose your retirement funds. This is a 401k rollover for working capital program. The IRS calls it a rollover for business startups, or ROBs. So per the IRS, a ROBS qualified plan is a separate entity with its own set of requirements. The plan, through its company stock investments, rather than the individual owns the trade or business. Therefore, some filing exceptions for individuals may not apply to such a plan. This type of financing isn't a loan against your 401k, so there's no interest to pay. It does not use the 401k or stocks as collateral. Instead, this is simply a movement or change of custodian. Some terms and qualifying. So you can see low rates here, often less than 5%. Your 401k will need to have more than $35,000 in it. You can usually get up to 100% of what's rollable within your 401k. The lender will want to see a copy of your 2 most recent statements. You can get 401k financing even with severely challenged or personal credit. The 401k you use cannot be from a business where you are currently employed, okay? It needs to be from a previous employer. So it will need to be from an older employment. You cannot be currently contributing to it either. So now let's look at the money that you can get with a combination of more than one of the 3 C's. So if you have more than one of those 3 C's we just went over. So some more funding choices. There's even more ways to get money, such as crowdfunding, angel investing and venture capital, grants, microloans. So on the grants, there's federal level, state, city, and even local, okay? SBA loans. So we are talking about the SBA 7A. This is the SBA's most popular loan. They guaranteed 85% for loans up to $150,000, 75% for loans greater than $150,000. The SBA makes the lending decision. Qualified lenders may be granted delegated authority to make credit decisions without SBA review. SBA 7A terms and qualifying. Maximum amount on offer is $5 million. Okay. Provide articles of organization, business licenses, documentation of lawsuits, judgments, bankruptcies, or other pertinent documentation. Lenders are not required to take collateral for loans up to $25,000. For loans in excess of $350,000, the SBA requires that the lender collateralize the loan to the maximum extent possible up to the loan amount. Since your business has been around the block for a while, these are either already in reach or you're close to qualifying. The term loan. Banks are often the first place we think of when we think of financing. But big banks only sign off on about 25% of the small business loan applications that come their way. Term loans often have lower interest rates than many other funding options. They also tend to be for higher loan amounts. So terms and qualifying here. Generally speaking, the company's banks end up funding have very strong financials and near perfect credit scores. They will most likely have to undergo a personal credit check. These kinds of loans may require collateral. Since you have time in business and cash flow, you're 2/3 of the way to term loans. You just need a collateral and great financials prepared by professional. So how do you choose? This is a huge buffet of business funding choices. How do you select the one that's going to be best for your situation? This is where our advisory team comes in extremely handy. Or help yourself with our business credit builder. It's your choice. It all starts with business credit. A recap, there's going to be tons of amazing ways to get business funding. You can find the one which fits your circumstances, including your strengths in areas like cash flow, personal credit or good business credit, or collateral. Our advisory team stands ready to help you decide amongst all these choices. Our business credit builder can help you build business credit, where it all starts. Get access to every legitimate funding program in one place. You pay us no fees ever. Use our loan volume to get lower rates and fees. Business blueprint to graduate to SBA loans. Never look for funding again. All right, so contact us for more information, 877-600-2487. Email info@creditsuite.com or go to creditsuite.com/get funding. Thank you so much.